Okay, something really big is happening right under the surface of the global financial system. And the very people who design the system, well, they're making a huge, quiet, and very deliberate shift. Let's get into it.
If US Treasuries are supposed to be the safest asset in the world, why are central banks quietly walking away from them right now? And why are those same central banks buying gold at the fastest pace since 1971, the exact year the dollar broke from gold?
This isn't about inflation, and it's definitely not random. Something far deeper has changed in the global financial system.
So to figure this out, here's how we're going to break it down. We'll start with the hard numbers, what I'm calling the $100 billion anomaly. Then we'll look at who's driving this change. After that, we'll get to the real reason behind it all, the weaponization of trust. We'll revisit that 1971 parallel, and then, finally, we'll talk about what this means for the future of so-called risk-free assets.
All right, let's dive right into the money trail, because the numbers here, they tell a pretty incredible story. Just look at this chart. You see that? For more than a decade, central bank gold buying was pretty steady, pretty predictable. And then, boom, 2022 hits and it just goes vertical. This isn't just a trend, you guys. This is a total structural break from the past.
And to put some hard numbers on that, before 2022, central banks were buying around 400 tons of gold a year. Since then, it's been over 1,000 tons every single year. I mean, that is a staggering jump. It shows a level of conviction we just haven't seen in our lifetimes.
So, you might be asking, where's the money coming from? Well, here's the other half of the trade. In just one recent 3-month window, foreign central banks dumped $48 billion worth of their US Treasury holdings. So they're not just adding gold, they're literally selling US debt to fund it. And it's that two-sided move that makes this so important. Okay, so we know what's happening. The next big question is, who is behind this? Because this isn't happening everywhere. A new map of money is being drawn right before our eyes. The big buyers here form a pretty clear picture, don't they? We're talking about China, Russia, India, Turkey, even a NATO member like Poland. What's the common thread? Well, for the most part, they're large, emerging powers that are trying to assert their own financial independence. This isn't some global panic. Nope, this is a strategic realignment.
And this chart right here explains exactly why. Western countries like the US and Germany, they're already sitting on piles of gold. Over 60% of their reserves in some cases. It's a holdover from an older era. But the emerging markets, they're way down at just 11%. So what we're seeing isn't so much an attack on the dollar, it's a massive multi-decade catch-up game.
And get this, take India for a perfect example. They're not just buying gold, they are physically bringing their gold home from vaults in places like London and New York. Bringing back 274 tons, that is a massive logistical operation. You don't do that to hedge a little inflation, no way. You do that when you want absolute physical control of your most important asset. It's a power move. So, that brings us to the big question. Why now? Why did all of this suddenly kick into high gear in 2022? Well, it wasn't inflation. The real trigger was one single event that basically changed the definition of risk forever.
So look, the use of financial sanctions had already been climbing for 2 decades, but in 2022, the whole game changed. The US and its allies froze Russia's central bank reserves. These are assets that were supposed to be completely untouchable. For every other central banker on the planet, that was a massive wake-up call. The link is crystal clear. The moment those reserves were frozen, gold buying went into hyperdrive.
This event literally created a whole new category of risk. You know, for decades, central bankers mostly worried about counterparty risk, the idea that the other guy might not pay you back. But this was totally different. This was permission risk. It's the risk that, no matter how good your credit is, your access to your own money depends on the permission of the country that issues it. All of a sudden, US Treasuries had this giant political risk that nobody had really been pricing in.
And this is why they're all flocking to gold. It's the only financial asset that totally solves this new permission risk problem. Think about it. It sits in your own vault. There's no issuer who can default on you or just change the rules. It doesn't need some third-party computer system to settle a transaction. It literally cannot be digitally switched off. And for thousands of years, it's been the ultimate asset when trust and everything else just evaporate. Which brings us full circle, right back to that 1971 parallel. It feels like we're in a similar moment, but everything is flipped. It's like history in a mirror. See, back in 1971, countries were selling their dollars to get the last of America's gold.
They were trying to force the US to stick to the rules of the system. Today, it's the opposite. Central banks are buying gold with their dollars to hedge against a system where they no longer fully trust the rules. The problem back then was the scarcity of gold. The problem now? It's a fragility of trust.
Okay, so what in the world does this all mean for the planet's most important asset, the US Treasury bond?
Well, the biggest takeaway is that the person buying U.S. debt is changing. For decades, the main buyers were foreign central banks, and honestly, they were price insensitive. They had to buy dollars to manage their own currencies. But now, as they step back, the new buyers are domestic folks, hedge funds, pension funds, and they are very price sensitive. They want to be paid a higher interest rate to take on that risk. So this kind of leads us down three potential paths. The most likely, the base case, is just a slow, grinding rebalancing over the next 10 to 15 years. A sudden shock from some geopolitical event is definitely possible, but maybe less likely. And an orderly, friendly restructuring? Well, let's just say that feels optimistic. The key thing to remember is the dollar doesn't have to collapse for the system to change in a really fundamental way.
And that really brings us to the final, crucial insight. You have to remember, central banks don't panic. They prepare.
And right now, they're preparing for a world where trust is fragmented, power is multipolar, and insurance matters more than yield. Gold isn't a bet on collapse. It's a bet on uncertainty.
So here's the real question. Are central banks hedging against a crisis or quietly preparing for a new monetary order?